We are live, guys. Welcome to this week's market update for the Denver real estate market. Being live, gosh, I'm on the spot. I can't edit. I can't do anything. So we're just gonna dive in. I've got a bunch of tabs open, but I want to share my screen as I always do to give you guys some insights into today's real estate market. We're gonna look at last week up until Tuesday of this week, and we're shooting on Wednesday. Real estate data. And as you can see through the thumbnail and the title, guys, we're in about a 60-day period where we might see the best opportunities to buy that we have seen all year, and maybe even going into next year. These 60 days between November 1st through December 31st may be the best opportunities to buy, not only in the last 12 months, but in the coming 12 months. So bear with me, buckle in. Let's do this. I'm going to share my screen, give you guys some insights into the market, and let's go. Guys, if you're live, please shoot some comments, some questions. If you're not here live, I would love to know what of this information you found valuable and what you'd like to see next time. So first things first, mortgage rates, they hit their highest point in 3 months. But the impact on the real estate activity is so far unremarkable. So guys, first off, what I'm showing you here is just some data insights from the brokerage that I am in. And we do a really good job of capturing great market insights that I think everyone should know about, especially if you're looking to buy or sell here in the Denver real estate market. These statistics are invaluable. So with interest rates, even though they reached a 3-month high, the change in market hasn't been all that much. With rates rising, inventory 50% higher than the last 2 years, and buyers are moving cautiously. This shift is on. Now, seasonally, guys, expired and withdrawn listings, that is something that we see increase, meaning more expireds, more withdrawns. Listings are increasing really over this period of Q4. Now, why we're saying that even though rates hit their highest point in 3 months, but the impact on real estate activity is so far unremarkable is because showing data is still high, and pricing trends over the last 8 weeks have increased on homes below 2,500 square feet. And essentially what we're saying in this report is that homes below 2,500 square feet, when interest rates are low, they tend to sell more aggressively. And so we're at an 8-week average of sold price that went from 506 to 544. And you could see it right here. You could see this increase of price. We had a little dip here, but for the most part, this is the pricing average this time of year for 23, 22, 21. We're above that. We're at an 8-week high, but we're guessing, just as it happened in 23, 22, and 24, I'm sorry, 21, pricing tends to retract, and I'm guessing we're probably going to end up somewhere in this ballpark yet again, partially because rates have increased, partially because of seasonal trends. Guys, as you can see on market, when we get into the latter end of the year, days on market typically rise, especially in a higher rate environment, which we were in end of 2022, end of 2023, and we're trending to be along those same trend lines where days on market, sellers, this is for you, days on market tends to be higher. And the part of the reason for that is because, like, seasonally, what we see around this time of year is showing slow. Holidays approach, nobody's really looking to buy. And so for sellers, your days on market is likely going to rise. We anticipate somewhere in the 60-day range. So that means, guys, if you're putting a sign in front of your yard from here until December 31st, expect the time on market, meaning the time it takes for a buyer to walk through the door and provide you a contract, it could be in that 60-day range or more. Now, let's show you some showing data to support this. And guys, again, if you're in the live, please share a question, show some love in the comments. And at the end of this video, I'm going to get you into why I think we have a 60-day window for buyers in terms of just finding the best deal possible over the last 12 months and potentially even into the next 12 months. But guys, look, sharing my screen, I want to show you showing data. So even though rates increased over the last, and we're at a 3-month high, as you can see, showing data has been very, very strong relative to 23 and 22. As you can see right here, the separation, this line, this blue line, is saying there's that many more showings happening since week 20 all the way going into about week 42, 43 here than there was in 22 and 23. But we expect that to decrease going into the holidays, especially as rates hit a 3-month high. Now, if we see rates decrease and improve over the next 60 days, it's likely that the showing number will be slightly above these averages. And this is just showing that there's more buyers out there showing homes. Part of that could be because of the increased inventory. But what's interesting here is even though there's more showings, what you're seeing here is it's taking more showings to go under contract. So all these squiggly lines down here was saying, hey, on average, it took about 15 to 20 showings before a buyer put a contract on a house. Now it's taking near 30 showings before a house goes under contract. So sellers, just buckle in. Over the next 60 days, it's likely not going to be the best market for you guys, but that will likely change in 60 days. And the reason for that, let's go back to this chart, is you can see week 0 here, average sales price, that's January. And what happens in January is it really only takes 2 to 3 weeks and we start to see pricing increase. Okay, let's go to showing data. Let me show you something here. Showing data, right? Here's January. It takes 2 to 3 weeks and you start to see showing rise, and really kind of hit that peak in that summertime between April, June, and then you kind of see this descent. Although that was opposite of what happened in 2024, which was interesting, likely due to some improvement in rates between this time. So what we're getting at here is, guys, right now it's very, very slow for sellers. A lot of that has to do with, first off, seasonal trends. But second off, look at this white space. You see all this white space? That is inventory. So if we look at 22, 21, 20, 23, inventory around this same time of year was right around that 7,000 to 6,000 range. Right now, we're at 10,600 properties. So when we have that many more homes for sale, the market overall is just slower. And that's why it's taking buyers so much more time to transact, because they have more to look at. They have the ability to be picky. And with more inventory, there's more options. And because of that, guys, as a seller, your house is going to sit on the market longer. So really, we've got 60 days left roughly 60 days left before January 1st. As soon as January 1st hits, that first, that second, that third, that fourth week, we're really going to start to see the market ramping up based on seasonal historical trends. And going into about February to March, we're in the spring season, and buying opportunities will all but subside, especially if we see rates improve, which we're crossing fingers, fairly optimistic that will happen. But regardless, even in the environment in 2023 where rates were at 7s, the market still did the same thing historically that it's done over the past 10 years, and that's increase in terms of buyer activity, buyer competition, home prices improving and appreciating. And so we've got October, the last 2 days of October, all the way in November and December, for there to be some of the best buying opportunities that you will see. Again, over the last 12 months and potentially going into the next 12 months, this 60-day window is incredible for buyers because it's taking longer for homes to go under contract. There's more homes available to look at. And when you couple that with a slowing market going into the holidays, you buyers have more leverage in negotiations. because these sellers are going to be sitting on the market for 60 plus days, they're likely to be more willing and able to negotiate and wanting to get a deal done before the end of the year. So buyers, you got about 60 days left. I would jump on it if the timing in your life is right. It might not be. You might just need to wait till spring. If that's the case, well, so be it. But if you're able to, if you're interested in, and you're wanting to buy over the next 3 to 6 months, now might be a great time. You might be able to find yourself an incredible deal. Not to mention, guys, new build homes typically have the best incentives in October, November, and December. Why? Well, because all the reasons I just told you, the market's slowing down. They need to sell homes. They need Q4 and the year end to look as good as it possibly can. And so they might be willing to take more of a hit on pricing, offer up more incentives in order to make their numbers look a certain way for shareholders before the end of the year and Q4. So guys, if you're looking to buy a home, first off, reach out to the best agent that you know, like, and trust, and that you believe will not only have your best interest in mind, but is a high-level professional that will be able to negotiate the best deal possible for you. And if you don't have that and you're looking in Colorado, reach out to me. All my information is in my bio. It's on my page. It's fairly easily to find. You could Google me. You could look me up on Instagram, Facebook, or you could just directly go to the link in my bio on YouTube and schedule a call directly with me. Guys, thank you so much for being with me today. I'm looking to improve these, guys. I'm looking to get you better data, better, more succinct points, and maybe do this for 5 to 6 minutes instead of 12. So stay tuned with me. We're coming live to you just about every Wednesday we possibly can with new data. And believe it or not, guys, the market shifts incredibly quickly. So this time next week, we could be having a completely different conversation. So always be sure to tune in if you're interested in the Denver real estate market data. And guys, most of what I'm showing you is the greater Denver metro area, the 7 counties that make up Denver metro. It's going to be central Denver all the way out to Brighton and Broomfield and Westminster and Parker and Highlands Ranch. So you're getting a really good idea of Denver metro as a whole, what's happening in the market, what you can expect as a seller, as a buyer, and ultimately, as best as you can, be ahead of trends. So with that, I appreciate you guys for joining in. Be sure to subscribe to the channel. We're looking to grow, man. We're looking to grow. We're looking to serve. We're looking to be able to help more people achieve their real estate goals, not just in a way that you guys have an exceptional experience from a service perspective, but also a professional perspective in knowing our stuff and making it our business to do the research, to know the areas, to know the trends, and to ultimately set you up for success, both in your life and your investment and financial well-being standpoint. So thank you guys again for joining. We'll catch you on the next one. Cheers.